Rich, it's great to have you. Appreciate the time. Before we get to some of the names, I do wonder whether you think the NASDAQ and the 200-day are an important chart today.
Yeah, I think this is very likely to mark the low here for technology, and I say that because past tends to be prologue. And to your point, in terms of these moving averages, I don't choose the way the moving averages do, and they have defined support for this trend in mega cap technology for almost 6 years now, save that pandemic collapse in February of 2020 and the so-called rookie mistake back in Q4 of 2018. That trend is intact, and again, today is very likely to mark the low of the recent pullback.
So with that in mind, talk to me about this. I guess is it a pair trade of NVIDIA and Tesla together?
No, I think when you think about those two leaders in their respective spaces, you would consider those real bellwethers, and NVIDIA has been a real star here. And what we've seen in both, actually, Tesla just sneaks into the green almost just as we come on here today. And I think both stocks remain in a very strong position in their respective spaces.
Well, Rich, what gives you confidence that this isn't a valuation reset overall? I mean, sure, maybe both Tesla and NVIDIA, for example, continue to do very well in their businesses, but the stocks have had this amazing run. The trend is going against growth stocks in general that don't have the fundamentals they do, but why not be concerned about those too?
Well, look, I think clearly there's reason for concerns for many investors here. We've gotten new information from the Fed, and of course, we're coming off a very defensive December on the back of the Omicron. So sort of policy in the pandemic, a 1-2 punch with positioning offsides, prepared almost for the exact opposite as we come into the new year. But that being said, you can't win the year in January, but you can lose it by making a rush to judgment. And I think to make a rush to judgment, as many are doing now, is really the wrong move. We've seen choppy starts to the year before. We've certainly seen it in technology, but at least as it pertains to the mega cap stock, mid-single-digit declines year to date are nothing to throw away the playbook, not just from last year, but really for the last 20 years, just about.
Rich, we talked about this earlier. We had a big deal today announced between Take-Two and Zynga. And do you think that as valuations come down, we are going to see more M&A action?
Well, clearly, I'm not here to talk about M&A, and I would certainly take that off the table. But look, when interest rates move up, it changes the spreadsheet for everyone. Now, as you know, I'm more a student of price and pattern and trend and less about Microsoft Excel. But I think for my work, I can come here today and tell you that those patterns and trends remain intact. And there's a lot of market cap that's still in a very strong position, whether you steal from the growth side of the aisle or the value side of the aisle. We've seen strength in both defensives in terms of staples, utilities, and healthcare, but also, of course, on the cyclical side, on the back of the strength in crude and yields, which continue to drive both energy and financials.
Yep. Finergy is the new sector, I guess. The two together have been the things that have been supporting markets last few days for sure. And your point about the start of a new year is a good one, Rich. Appreciate it very much. Good to see you.
Thank you.